Brian, what's your outlook for the credit markets in the US?
The underpinnings of the credit markets fundamentally are pretty solid. We came off of a really, really high base from a couple of years ago. And so they've slipped a little bit if you look at leverage statistics or profit margins, even EBITDA, but still really solid. Our fundamental analysts will plot their industries on we call it a credit cycle wheel once a month, and it's overwhelmingly still in the recovery stage or the expansion stage of the cycle at this point in time. So still pretty solid. I think the big news is that there's now yield in the corporate markets, and there's also massive demand right now for investment grade credit. So the technicals are really strong. We had the most busy January from an issuance standpoint of all time in investment grade credit. And so there does seem to be a little bit of this fear of missing out that we saw late in the fourth quarter, a little FOMO going on from people who either were sitting in cash or were and didn't extend their duration or had an underweight to credit, still thinking about the recession rhetoric from last year. So, I would also point out that the dispersion in the credit markets, not only in investment grade, but in high yield, continues to grow. So it's a great bond picking opportunity. It's not necessarily looking at an entire swath, an entire industry or entire sector. It's about security selection. And for us, that's always job number one. Upgrade opportunities still exist. And we've seen the last couple of years that upgrades have far outpaced downgrades. So rising stars bonds moving into the investment grade ratings universe from high yield have been really strong the last couple of years. Probably this year it's going to pull back a little bit, but we still see more upgrades than downgrades. I think the other positive that you see in the credit markets right now is the discount dollar prices. And so many bonds are priced below par here, just given the move in rates that we've had. So you've got positive convexity in this market. And for total return investors like ourselves, that's really good news.
Any final thoughts on your end, Brian, about risks and opportunities in the fixed income markets today?
Yeah, I'd focus on one opportunity we really haven't talked about, and it's really, I would call it securitized credit. And we typically don't use agency mortgages. Again, we're more looking for opportunities that have positive convexity. But I think about an area like the securitized space where, the asset-backed world not only encompasses the consumer, but also some corporate spaces as well. And thinking about aircraft leasing, whole business securitizations, those are interesting to us.